the C-Suite Edge. I'm your host, John Light, president and founder of Sabretooth Recruiting. And today I've brought in a really interesting guest, Jared Liscio. And Jared, thanks, number one, for joining us today. I really appreciate it.
No, thank you so much for having me. It's a pleasure to be here with you, John, and I'm looking forward to chatting a little bit more.
Well, interesting. I talk to a lot of people who deal in, I guess you could call it business process outsourcing and consulting and advisory and this sort of thing. But your work at Weiss is a little bit different. I think the tack that you take and where you guys put yourself. So I was hoping you could get us started with a little bit of your background and what you're doing in the company before we go much deeper, because I think people are going to want to hear where y'all fit into the equation.
No, awesome, and definitely a really great place to start. So me personally, so Weiss is actually an accounting firm more traditionally, but they have their advisory practice, and I'm one of the very few people within the whole firm that I actually don't have an accounting background. I began my career in financial services and M&A, then I went to derivatives before pivoting and going into more like the FP&A route. Mm-hmm. And so a couple years ago, Weiss, as they're building up, and they're still building up in different service areas and expanding, they were building out their financial and their FP&A consulting, servicing, advisory area. So they brought myself and one other person on to really spearhead that group, spearhead that service line. So that's where we've been the last couple of years, just building it up and working with new clients, other clients within the firm to really just keep guiding them along. And it's been an awesome experience thus far, just to have the variety of clients, kind of see both ends of building it up from the ground as well as the work itself.
Awesome. Okay. We're going to get to the meat of this. Okay. 'Cause number one, it's odd to me, and I'm an accountant originally from a professional standpoint. That was my degree path. First, 4 or 5 years of my career. Hearing FP&A and public accounting firm, those things don't really compute because they're usually, to me, they don't really go together. So one of the questions I have, and that I like to ask pretty much every guest, and I think it's important to give a little context in this relative to what you do, is what's the biggest problem you solve? But contextually, kind of what variable in the equation, where do you fit in that equation with this problem you're solving? Because it's one that I personally think is a massive issue for small and medium businesses across the country.
Yeah, really good question. It's such a broad one because so many things fit under our umbrella and fit under that thing between analyzing data, kind of figuring out the past. But if I had to pick one that I think is really a big value add that we find is liaising between our clients, the business, and really their source of capital, whether it's investors, creditors, banks, things like that, where we work with our clients and we understand what's the story financially, right, and with the numbers that they're trying to tell, but we can put it and shape it in a way that's in, I'll say, the language that investors or creditors want to be told that story in. And so if I had to, again, pick one really big value add, and I could tell a couple of stories later on, but we can really bridge that gap really, really well, because a lot of our clients know their business excellent, but they maybe don't know how to translate it into forecast projections, right, basically spreadsheets that finance people love to see, and that's where we can come in.
Yeah, I mean, the numbers guys are numbers guys, right? And
exactly.
Sometimes the people running the business, that's not their forte. They may be excellent at running a restaurant, or they may be excellent at logistics, or excellent at whatever else is out there, and so it ends up being a big gap. I noticed this. I've gone out on the to raise money before, and rejection after rejection after rejection, and you have to learn the right questions to ask, and you have to learn the right way to communicate the information, which to me is massive, because lenders and investors do talk a different language, I think, than most people who go start a business, whatever that business may be.
Yeah, and it's the gap of, right, investors, lenders, whoever it may be, right, their business is lending, mm-hmm, whereas our clients, their business, like you said, they're restaurateurs, logistics, they have whatever their product or their service may be, that's their language. That's just what they know, right, better than a lot of other people. And that's what they want to focus on too. They want to focus on just delivering to their customer base. Mm-hmm. They don't want to so much worry about having to go through the stress and the headache of, I got to build something that makes sense because I need this loan or I need that coming in. So really it helps again, the creditors, but also helps them just focus on what they do best. So everybody's happy, or in a perfect world, everybody's happy.
Let me ask you this, because typically when we talk about finance and we talk about going and getting, whether it's a lender or investor dollars or whatever it might be, I think people tend to think, well, I'm not big enough. I'm only doing $5 million in revenue, or I'm doing $1 million, I'm growing, and I need to put in, and a lot of people I think make a mess of this just because they don't know what they don't know. I need to get credit line set up where I can smooth out my cash flow. That takes some effort to plan, even for a smaller company, but the risks are very high because you can be left, exposed liability-wise. But as you start going up the food chain and companies get bigger and bigger and bigger, things get more sophisticated and more options might be available to them. Can you share a little bit about your process when you come in and talk to someone? I mean, if somebody has a small business and they're not a medium business yet, if we can put it that way, is that someone that should be talking to you?
I'd say they're probably, if they're at that cusp of really getting more to that medium size, we'll call it maybe 20 to 50 million in revenue or so, if that's what you're thinking. I'd say they're probably on the cusp of really getting to speak with us or really kind of get the most value out of our service. So in a way, yes, because they're just about there, so it never hurts to really be maybe a little bit more proactive, right? Because you don't just want to think about the business today. And that's part of our thing is we want to help you think about what the business is going to be like 1 to several years from now. And if 1 to several years from now you have to start thinking about different financing options, then we can have that conversation and we can guide what that's going to look like, because it's going to change the whole balance sheet. It's going to change the capital structure, and it's going to change your cash flow, because now you have to worry about paying interest, paying principal, or whatever else it may be. And these are things that may not be real today, or so to speak, like they're not actually components of your capital structure today, but they will be, and we have to start preparing for that.
Yeah, I think dealing with the whole capital side of business is something that eats a lot of folks up, because the first thing you have to start off with, frankly, is you have to have good books, right? Because you got to understand what the business is, how you generate revenue and profitability. And in some cases, I've talked to some folks or been involved around the conversations where we've got this great business, we have all this revenue, and we start looking at the unit economics and go, yeah, but you're not profitable.
Yeah, and that's the other side of our biz, right? In addition, like I mentioned, kind of the lenders, but also just looking at the numbers, looking at, like you said, the unit economics or whatever is really driving the business, and how to segment those different pieces of whatever the different revenue streams are, the cost structure. And it really can be surprising to, like, I think the way you described it is really spot on, where it can be really surprising to a lot of different, we typically, me and my team, we usually interact with like the CEO, CFO, controller, people in that in those roles. Surprising what's driving the business, and sometimes even what's maybe even more of a loss leader, what's kind of pulling it down that they didn't even know. Because when you slice and dice the data one way, it may paint a really rosy picture, but when you cut it a little bit differently, you understand like this product line, this division, whatever it may be, is actually kind of pulling things down a little bit more than we thought. But that's the type of stuff, right? I always use the analogy, peeling back the layers of the onion, right? Use the data, peel back the layer to find out what's actually going on under the hood, and really tell the story of what's driving the business.
Yeah, so, okay, I think this is an important question too, especially if you're a small or medium business owner. It's important to big businesses as well. They have boards and layers of people to deal with this sort of stuff. A lot of smaller companies don't yet. But when we look around right now, we're in, I think, what most people today would consider a high interest rate environment. Now,
Totally.
A number of years ago, 6, 7, 8% on a 30-year mortgage for your house was pretty normal. And therefore, your business, might have a big chunk, a higher percentage, because typically it's going to be a little bit more. Maybe it was 7, 8, 10%, whatever, to get a line of credit, a loan, or what return an investor might be expecting. Today it's tapered a little, but inflation is still pretty warm. There's a lot of challenges in a market space. So I'm interested in also getting a better understanding what you can share on where we're at currently when it comes to finding credit or investor dollars for these businesses, and what are the next 3 years likely to look like?
Definitely a loaded question, right? Because in many ways, my guess could be way different than somebody else's, and there's really no, and each for valid reasons. Just to start with, in terms of the interest rate environment, right? Definitely, it's come down slightly, but still higher than historical, and that's such a big piece of what our clients ask for, specifically around cash flow. Of just what does that look like? Especially a lot of the lines of credit are floating rates. So, where do they see rates going in the next?
And it used to be not long ago, right? Money was not free, but it was a lot closer to free than it is today. The cost
oh, tremendously. And that flows back to the other part of your question about really investor sentiment, right? We're seeing, like on the venture capital side, really in 2023, really like stalled out a little bit, where a lot less investment was going to new companies, and what these capital firms and what these investors were doing is actually focusing more of their capital on existing portfolio companies. So instead of saying this year I'm going to go and get 3 new companies out of my portfolio, and that's going to be what I'll use my 50 million or so, whatever the number may be. Instead, they might only do 1 or 2 add 1 or 2 companies and take another 20 million and really use that as to just focus on the existing companies, and wherever the efficiencies, whatever they might need, focus it that way, because just capital is expensive and it really increases the hurdle rate that they're finding. So to have a successful investment is just tougher. So they're finding more, they'll focus on what they believe in the portfolio is going to be successful and just kind of double down on that. We're seeing that slow down a little bit, and by slow down I mean ramp up for acquisition, but definitely I wouldn't say it's anywhere near the pre-pandemic levels, or even I guess into 2020, 2021, where money was so inexpensive in investment and dollars are just flying everywhere.
Yeah, I think there was a lot of overhiring in that time period as well, and we saw that, I guess, move towards the center or stabilize a little bit with all the layoffs the past couple of years. Look, I grew up around the energy business, specifically oil and gas, and man, we're used to just tremendous ups and tremendous, gut-wrenching downs on the roller coaster. And I think as a country, we've been dealing with that. And I know, talking from my perspective, from a business development view, 2023 was probably the worst year of my career I've ever experienced for business development. Just horrid. 2024 improved quite a bit, and so Lord willing, we hope the rest of it keeps improving. But I think people are ready for a breath of fresh air to hit the marketplace, and what investors and lenders are willing to do and are actually put their money on is always a great indication that if they're starting to move the right direction, we can feel better about where we're going to be in 1, 2, 3 years from now.
Yeah, and definitely what I will say is I've found, at least in the last, and this is just the last 2 to 3 years, lenders, investors, they've been more, for lack of a better word, I'll say forgiving. And what I mean by that is they won't be so hard and strict on, I have X covenants, and if you trip that covenant, like, game over. They've been a lot more willing to work with you, to see you through that process, whatever it may be, which I think is a testament of just the market softening, and that things aren't so rigid, right? There is more forgiveness, there's more growth that they're seeing. Everybody's hoping that, just as inflation tapers down and things are just more stable, like even more so and more broadly, that it becomes a more easy landscape to navigate. And that's what we're seeing along our clients as well, of just the banks being a lot more just willing to work and not so much really hard and fast, which I think is a great thing, because it lets everybody kind of breathe a sigh of relief. Yeah. And that's what you want. Again, you just want to focus on doing you're running your business the best you can. You don't want to have to worry about having anybody breathing down your back.
No, man, nipping at your heels. Speaking of that, if someone wants to get a hold of you, Jared, and have a conversation, gain some more insights, and maybe talk about, hey, how would this work better for me? What's the best way for them to find you?
Yeah, a couple of ways. I'd say LinkedIn's always the easiest one. You can find me there, as well as if you go to WIS.com, we'll Google just WIS and Company. You'll find my contact information there as well. And you could always email me as well, jared.liscio@wis.com. And I'm always happy to reach back out, have a conversation. And even if maybe wherever the state is, if it's not perfectly the right fit now, I'll do anything I can to help you in the meantime, even if it is kind of point you in the direction of whatever it is that you may be looking for too.
It sounds awesome. Jared, thanks so much for joining me today.